One. This is John Martinka and the Getting the Deal Done podcast. Very special guest today, Monica Duggal. She is an entrepreneur, a wide and varied background of entrepreneurship. Today, she's going to talk to us about a company that her and her husband started, grew, tried to sell, and couldn't sell and eventually sold, and the things she learned along the way that everyone listening can learn from as they go through this journey. So welcome, Monica.
Hi, I'm very happy to be here. Thank you so much for the invite. I'm
Yeah, it's
excited.
great to have you. I know from our previous call, it's an interesting story. I'd like to start a little bit about you and your background, how you got to the point of being an entrepreneur.
Oh my gosh. Okay, so that started a long time ago. That started when I was a kid, actually. My mother was an entrepreneur. All of her friends were entrepreneurs, so I thought that's what you did, is you were an entrepreneur. So yeah, I that was how I started, and I ended up. I wanted to go to law school and I ended up in investment banking, and that just really brought all of the entrepreneurial learning that I had from my mother into perspective. And so I think that's why I fell in love with finance and I decided to do finance. Um, I also sold a company, and that was very exciting. We had it for 16 years and we had tried to sell it at one point, and we weren't ready. So we had to get ourselves ready, and that took us about 3 years.
Okay, so the entrepreneur journey. I know we talked before about practicality and doing things. If you had to redo it, I think you had told me you would certain things you would do from day one. Uh, is because there is a lot of uh, l- talk about the adage, start your exit the day you start your company. Most people can't pay attention to that. They're trying to get it off the ground, and realistically, you don't have much to sell if you don't get it off the ground. So, talk about starting the company, and this is the company that was in digital marketing.
Right. So basically, we started with one big client, and then we just started growing, and we started adding more people to our environment and more products. And we just, we were growing. It definitely funded our family. We pretty much, the whole company was we definitely grew our family in the company in terms of our kids getting older. So I don't think we were really thinking about selling at that point. So it's interesting that you were saying, like, the think about the exit as you start. So I think many people, business owners, have different reasons that they start their business, obviously for income. But I think that for us, it was definitely it was just an exciting opportunity to start this company and grow it. But then we did get to a point where we started thinking, okay, the kids are getting older and we want to, like, maybe exit and make some money. And so then that's where we decided to sell the company. And when we went into the market, it didn't look very good for us. We were
Yeah.
not ready. We didn't have a lot of systems in place. So,
Yeah, so
uh,
let's go back on that. You started your company 16 years ago?
right. We had it for 16 years.
You
That's
had
correct.
it for 16 years.
Yes, yes.
You sold it 7 years ago. So if we go back 23 years,
Yeah.
you're right after the dot-com boom and bust, and you had a digital marketing firm. You must have been one of the first ones.
Yeah, yeah. The thing about it is we actually did have some other business partners, and so we it was a really great situation for us because we actually kind of folded into we were in Redmond, so Microsoft would have been there. So they have a lot of partners, so we partnered with them. We also had, like, Google. We had a lot of pretty big clients. We grew a really great team. So, so yeah, it was. It's interesting that you're saying that because I don't really think about it in terms of like, okay, the dot com, right? Because that would be a bigger picture of it. The way we did it, we just started the business because we were trying to create a service between products and the end user. And so that's where we came in terms of our digital marketing is creating that filling that gap, right? So if you just bought a product, we would get that product ready for you so you can use it. You wouldn't have to go in and figure all these things out. So that's how we would work with the big companies. And so yeah, I was definitely in the dot com when I was in investment banking. So when you talk about that, my brain just goes back to being in investment banking in San Francisco and all those tech companies that we did bring public, which is interesting because our company helped Apple. I remember one of my really good friends that I work with there. She worked in Syndicate and she was flying around with Jeff Bezos, not Jeff Bezos, excuse me, with Apple, Steve Jobs. And she never told me the story until like 20 years later. I was like, wow, that's pretty cool that you were doing that.
Yeah. Okay, so you started a company. Uh, did you have did you and your husband have much experience in digital marketing?
Oh, yeah. So definitely deep experience. My husband's very, he's got a lot of experience with tech. He started when tech started, and he did a lot of work with Microsoft in
Okay.
terms of all their classes. So yeah, we did, and then the team that we were with as well had very deep knowledge in tech.
Yeah, and I think that's a good lesson. And when you start a company, you need to have that knowledge. It's actually different than if you had said we want to buy a small company and grow it, because if you're buying a team, you may not need all that knowledge right up front. You can learn from the team along the way. So
Right.
let's talk about your exit and the lessons that you learned. And I'm going to ask you a few questions on different topics.
Sure.
And you've said you went to sell the company. Sounds like it was about 10 years ago, and it was tough to sell. So usually there are a number of things that cause that to happen. Um, well, number one is the financial statements, the financial systems and processes. Were you ready? Was the accounting department ready?
Um, I would say in terms of somebody like a buyer coming in and looking at
Hmm.
us, I would say no because we weren't really operating in that capacity. We were doing our financials. We did have our CFO, and that was pretty transient. So we didn't put a lot of effort into just really, since we were a lot of private companies, since you don't have to submit all your financials to the Securities and Exchange Commission, I think a lot of us, if that's not it, the reports and stuff of this, the due diligence, it kind of sometimes takes a back seat. And so, but when we did decide to sell, that was not the case. Then we actually brought auditors in to take a look at everything. So when we have the buyer now look at it, it's not only are they ready, but they've now been looked at through a third neutral party. So it's a lot more believable because I know that for buyers, when you're going to look at a company, you definitely have to look at everything and you have to make sure that all of the financials make sense and they're all telling the right story.
Yeah, I think that's a good lesson that you have to have your financial statements in order, good systems. In today's world, uh, one of the buzz phrases is quality of earnings report. So the buyer hires basically an accountant, forensic accountant to go through things. And is it what it appears to be? And what you did was preemptively get someone in there and say, clean it up, fix it, give us the right processes, so we don't fall into that trap of sloppiness again.
Right. No, no, exactly. So I don't think that Like, just to be fair, I don't think that we were sloppy. I just don't think that when you have a buyer looking at your company, they're going to look at different ratios. They're going to look at different aspects of your financial statements. So if you're doing it internal, then you're just using it to create your profits, to create your cash flow, to forecast what other markets can we go after? How are we doing on our numbers? So I think that it's just a different perspective for sure.
It
And
is. And
yeah,
I mean,
yeah.
maybe the word sloppiness didn't apply to you. It sure applies to a lot of small businesses out there uh, when you see some of the accounts and what they make no sense on a balance sheet or an income statement, or when I see uh,
Yeah.
income statement items, balance sheet items on the income statement. And
Right, right.
yeah, so okay, so you
Yeah.
forget the accounting. Another one that always comes up in a small owner-operated business is how dependent is the business on the owners?
Right, right,
Yeah,
right.
what about your
So
situation?
I think because we had also business partners, we were, I wouldn't say we couldn't take vacations because that was okay, somebody else could cover. But I would say we didn't have the standard operating procedures in place. And what I really mean by that is that at some point, it's almost like if you have to create a franchise, right? So what we're going to do if we create a franchise, we're going to replicate this, right? We're going to take your model and now somebody else can use it and we can create like maybe 10 more companies from your model, from your standard operating procedures. So that's basically what we had to do. And so we really took that serious. So in the rebranding, we were able to create really solid frameworks, right? So, for example, John, if you were looking at our company as a buyer, it would be very simple. You could say, okay, I see all of this. This makes sense. Now, if you wanted to get more answers, because you're like, okay, I don't understand this or whatever, then we could talk to that. But you at least you had something very clear, like a summary of everything that we're doing. So we really put a lot of time and effort into that. And we actually did hire a consultant to come in and help us with all of that stuff. And I
And-
think that
Okay.
really helped us in the sale as well because of the clarity.
Did the consultant, was one of their jobs to help you get out of the day to day?
Yes, exactly. Not only get out of the day to day, but just really everything that we did, just put it in like, let's say this is a summary of this service. Here's a summary of this service, right? So not only that, but then in a larger like framework, right, where everything fits. So that actually it was pretty powerful. Like I don't think we're doing that right now currently with our family office, but I am trying. Actually, I listened to um one of your podcasts and there's a COO that does fractional. So I'm thinking
Yeah.
of working with that person because that's very powerful. Those systems are powerful and they
Right.
do definitely make a difference.
Now, another, another thing that comes up when, companies maybe don't aren't selling for what they could sell for is the team. But it sounds like you had a pretty good team then that you were able to retain. I like to use the phrase attract and retain good to great people.
Exactly right, John. And that's one of the reasons when they asked us to stay on for 3 years after, we didn't really have a problem with that because we did care about our team. Our team grew with us from the beginning and right as we added more people. So we really, really did care about our team. And so we were fine just helping with that transition. So some of some of those team members actually stood with the company. Um, as they grew, obviously they couldn't keep everyone, but then at the end of the day, if they had some of the people that could fill some of these spaces or maybe other parts of their company, then uh, it was fine. The integration was actually really, really amazing. I was actually pretty impressed, even with the company that had purchased us, how nicely it all kind of came together.
That's great to hear because a lot of times the transition and the integration is the thing that gets left till the very last minute. And a smart buyer knows to bring that up a couple months before closing and start doing little steps along the way to make
Right.
sure that day one isn't a catastrophe. Uh, a lot of times owners get in a position where, they're doing really well and growth is secondary. It sounds like you were growing all the way through this process.
We
It's
were
attractive to a
definitely
buyer.
growing. Yeah, we were definitely growing, and definitely that would be attractive to a buyer. So I think because, you know, all of us actually, my husband and I and the other partners, we're all pretty solid growth mindset people. So I think we were always looking, okay, so what's working, what's not, right? Like if some part of the business wasn't working, then we just got rid of it, right? And then maybe do some economies of scale. Okay, let's go after these clients because they really want this, or we upsell them because they're asking for now this product, right? And since we're already working with them, it's easy for us to give them that extra service. So we definitely were we were very thoughtful. And I think another reason, John, that it worked really well for us is the partners that we came in with had already had some other companies and had already had experience. We also on our end had already a lot of experience. So I think when we all joined, we were all pretty much already serial entrepreneurs. So we all had some experience with so I think that was very helpful.
Okay. Now, we, you've told made some great points that will help people. Uh, And you're faced the same issues a lot of small business owners face that the accounting department, the owner dependency, and getting out of the day-to-day, putting in systems, which is, can be so important and growing, of course. Now, when we talked in preparation for this, you used the term golden handcuffs.
Yes, that's correct. Okay.
Talk a little bit
So
about that.
yeah, so basically the golden handcuffs, and I'll tell you why that happened to us. The company that acquired us had just acquired another company probably like 6 to 8 months before. They paid off the owners and then the owners took off. The whole thing collapsed. So, so when they came to us, they're like, okay, well, that's not going to happen to us again. You
Yeah.
guys are going to have to hang out here for a little bit. So that was it. So the golden handcuffs were part of the payment was for when we sold it was that we had to stay there for 3 years to get the second part of the sale for of the company. Yeah.
So it sure seems to me your buyer learned a lesson on that previous acquisition. They made a mistake. They learned from it and they
Yeah.
corrected
Yeah, yeah,
it.
yeah.
Yeah,
And,
yeah.
and what I loved is they were very professional, and they learned their lesson, and they were professional, and they were still easy to work with, so that was
Yeah.
good.
Did they have any golden handcuffs for key employees?
Uh, I think mostly a lot of the employees did want to continue to work with the company. I think the only person that ended up actually having to stay was my husband. Actually, he was the only one that had to stay because he's a COO and then he became the CEO. So he was very vital. So he's
So
the
they
only
didn't
one.
keep your employees.
Oh no, they kept the employees, but they weren't going to just keep them as they weren't going to keep them just for the 3 years. They wanted to keep them like indefinitely.
Okay, but did they offer any golden handcuffs, retention bonuses, things like that? Just a
Uh,
job.
we actually offered that stuff to them.
Great. Yeah.
Yeah, we offered that to them. We gave
I,
them payouts
I was going to
to
be my
stay.
next question because I've
Yeah,
seen that so much lately that
yeah.
owners who say, this is the team that helped me get where I am, they deserve a small piece of it.
Yeah, no, for sure. We definitely took care of our executive team. Like I said, we grew. I mean, we went to their weddings.
Yeah.
We were very friendly with them. They were great. That was a
Okay.
great team. Yeah.
So to finish up here, uh, and you're a very busy person. Do you get involved with things outside of business? It sounds like you're generous. I'm guessing you have a little bit of a charitable side to you.
Yeah, so I just joined. I got on the board of the Los Angeles Ballet. So I just I got invited, and they want me on the board. So I will be doing that. I love the arts. I love ballet. My grandmother had a beautiful photo of the Nutcracker, the fairies with the blue dresses. And I've just always loved ballet. I go to the Nutcracker every year. So I'm very excited to do that. Yeah.
Okay. So let me finish up by asking you, is there a question or we've been on other podcasts that don't ask that you wish you were asked?
Um, I'm sorry, what was the question?
Is there a question that I or others, when you've been on other podcasts, never ask you that you wish someone would ask you?
Oh gosh. I can't think of
No, I
anything. Yeah.
surprised you.
Yeah, you did surprise me. I love talking about finance. So anywhere we go with that, I'm happy. Yeah.
Yeah. Well, we didn't talk too much about finance. So you started out, maybe that's it. You started out in finance, right?
Yes, I did. I
You
did.
got a
I did.
numbers
Yeah.
person.
Yeah. 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 My mother would talk to me about like interest and just so much about business. And it was, as a kid, I just really didn't know what she was talking about.
Yeah.
But when I got into investment banking, I was like, oh, it all makes sense now. Okay.
Okay. Well, look,
Yeah.
Monica, I've enjoyed having you on this podcast. How do people get a hold of you?
They could go to my website, www.monicagarciaduggal.com. And I did, okay, John. So I started this bites, a financial bites method. And so I have a PDF, a blueprint that people can download. So basically, I looked at everything for finance, like what's important in finance. So I came up with like budget, investing, taxes, exit strategy, and standard operating procedures. So that's all in there. I I'm very excited about that because I think if you take one, like the B, 1 month and look at your company in that in with that view, and then maybe the next month investing, right? Like, what are you investing in your company? Maybe products or
Mhm.
and then also your taxes. How are you handling your taxes or your exit strategy? If you wanted to sell it tomorrow, are you ready? Right. And then finally, your systems, right? Are they working? Do you have any? Do you need any? So I just started thinking for 30 years, I've been doing finance. Like, what are the main ingredients? And
Okay.
that's what I came up with.
I'll put that in the show notes. I will answer your second last question about owners being ready to exit, and the answer is usually no, which is why
Yeah.
I have this
Right.
podcast and others have
Right.
podcasts, and
Yeah.
because they're not because
Yeah.
a lot of let's face it, we have our business and we think it's the greatest thing since sliced bread, uh,
Yeah.
and a buyer doesn't always look at it that way, just like you experienced, and you had to do those things that everybody should be doing, which is why I'm
Right.
so glad you were here because you didn't
Yes.
just say theory. You said we were stumped on selling and we figured it out. So
That's right. Yeah.
thank you very much for being here, Monica. It's been
Thank
a
you.
pleasure.
I really appreciate it. Thank you.